Hey everybody, I'm Mike Swanson with TradeWest Forex, and today I've got something brand new. I'm going to be teaching you how to avoid a false breakout. I've done a couple different trainings on false breakouts, stop hunts, and different things, but we're going to take a little bit different angle today, and I'm going to teach you a few more brand new things. So first, let's talk about what causes a false breakout. Well, false breakouts can occur for several reasons, and here's a few of them. Market exhaustion. So if the market's been pushing through a large amounts of liquidity, it can be exhausted. There might be no more buyers or no more sellers to continue the move. It struggled pushing through and it's done, and it can pull back. Okay, so market exhaustion. Second thing could be a lack of interest or market participants to push through a support or resistance level. Okay, so maybe there's not a lot of liquidity there, but there's just not any interest to actually get in and push it through. Maybe it's the time of the day, or it's something else. But the last thing here that we're going to talk about is a broker stop hunt or price testing by large players. Okay, so how do you detect market exhaustion? Okay, well, I'm going to teach you something today. It's really simple, probably one of the most simplest methods to detect market exhaustion is to use an oscillator such as the stochastic. And you can just use the default settings of the stochastic indicator. What you're going to do is first locate a support or resistance level that, where there's a potential breakout. Okay, so if you're looking to take a buy trade and you find a resistance level, that's your first step. Then what you do is check where the stochastics are at. A lot of traders do this backwards. They use the stochastic indicator to give them a signal, to fade a move or to trade a setup. What we're going to do is do it the other way around. We're going to find a level and then check the stochastic as kind of a filter. Okay, so now all we got to do is check if the indicator is above 80 and you're trying to buy, then you could be entering into the end of the trend. You might be buying right at the end where it's about to turn, where the market is exhausted. Okay, so we don't want to do that. And so let me show you an example of this really quick. Okay, so here's a level I've located on the charts. You can see clearly this market has been struggling to push higher, and several attempts it pushed up here and failed. So what I'm looking at is right here, there is a potential to go long, right? It kind of pushed outside that level, that area. It was pushing through. A lot of traders tried to buy that. Okay, with hindsight, we can see here it failed, but you have to realize at the time when you saw this, it looked like a good trade. Most traders would have tried to take it. However, if you look down here at our stochastic indicator, it's clearly telling us the market's exhausted. We're up above that 80 level, way up at the top, and there's a very small chance the market's going to push through there. Okay, maybe if there's news or something that just kind of comes in and wipes out the technicals, then it can fail. But most of the time you're going to see if it gets up here like this and it's up at a legitimate resistance level above 80 on the stochastics, the market's exhausted. So a really simple way to locate exhaustion in the market, and it's very effective. This is the correct way to use this indicator. A lot of people use it for crossovers and all kinds of different things. It doesn't really work very well. And obviously, for a short trade, you would look at if it was below 20 and you were trying to go short, you wouldn't want to go short, right? Pretty simple. Okay, next thing I mentioned was low liquidity trading times. You want to avoid those because they can cause false breakouts, right? When there's not a lot of traders in the markets, that's what causes the lack of interest, and the market doesn't break out. And so the easy ones to detect here of low liquidity trading times is just when the New York session closes, the markets are usually quiet, depending on the pairs you're trading, right? So if you're trying to trade a breakout in the middle of the afternoon, there might not be a lot of players behind the move, and it might just end up being a false breakout. Also, holidays can be slow days with low liquidity. So major holidays, you can see a perfect looking setup, but the market just sits there and goes sideways and doesn't ever break out. Also, one more thing I didn't note in here is that if there is a large, a really big news announcement such as non-farm payroll coming out, the day before it comes out, you can see the market's really quiet and not a lot of liquidity entering until that's over. So those are just a few things you can look out for to, again, to help filter false breakouts. And then another thing I want to show you is stop hunts. I've had a training on this on my blog already. You can go check out. But I'm going to go over it a little bit different today. I'm going to show you what it is and what price testing is. Okay. So another term for this process is liquidity discovery. Okay. So before big players attempt a breakout, they want to make sure they will succeed. So to do this, they'll actually buy or sell into resistance to see how strong a level is. Okay. And I've missed this one up here. The purpose of a stop hunt is to actually test price levels to see where traders' stop loss or pending orders are at. And like I say, that's called liquidity discovery. And so before they do that, they want to test the market. They'll buy or sell into a resistance level. Buy into a resistance, see how strong it is. If it doesn't break with little effort, then they're going to trade the opposite direction, and that's what causes a false breakout. Okay, if they're selling really hard into support and it just ain't going through, they're going to quickly get out and reverse the trade, realizing they can cause a nice bounce, and that's what looks like a broker stop hunt or price testing. Okay, so let me actually show you how to do this, how you can see other traders' stop orders and kind of see this process in action through the market sentiment tool that we have on Informer. And I'll give you the link to this in a minute if you don't have this tool downloaded. But here is what it looks like. Okay, when you get it downloaded and you get logged in, you'll see a tab up here that says Market Sentiment. This is all free, a free tool you can use of ours. You get in here, you have Market Sentiment. You choose your pair and a time period that you want to look at. So I'm looking at the last 7 days here. And if you look at this, you'll see that there is these dark areas. There's these dark areas of green and dark areas of red that'll show up. Right now we only see this yellow. But what's different here is we're seeing this yellow area. This is telling us those are sell orders. Okay, those are orders, stop loss orders on a buy trade that they'd have to sell to get out. Or they could also be sell orders that want pending, limit orders that want to go short. Either way, it's resistance to the market, right? Because I'd have to push through those to go further. Well, you can clearly see here that the market broke through this level. Why did that happen? Well, this shows us that when the traders, when the big players were coming in here trying to test this area, they found some of this resistance, but it wasn't this darker area. It wasn't very strong. The market came down and tested that, right? Do you see how it tested it through there a bit? It started absorbing some of those orders, but what did it do? It bounced, right? It failed to break through. So what happened here is the opposite. It came down, found the support, and found it was really strong. The market kind of exhausted itself, and the market created this false breakout. You can see that it, like I say, it tested there, it could not push through, and it bounced. And then what happened? A new level showed up, a new support level. These were buy orders, or they could be stop losses on sell trades, right? So, and actually in this case, let's see. Yeah, it would be targets on sell trades. Sorry, somebody's selling, they're going to buy down here below. Okay, so anyway, the market comes down, and right over here it starts absorbing some of those orders, but fails to push through them, and here we are bouncing back up. So pretty straightforward using this information. It comes from several liquidity sources through a broker that provides this, and so we just compiled it into our platform. Okay, so that is how to see other traders' stop orders and can kind of help you determine what's going on when you're about to try and take a breakout trade. You don't want to be taking a breakout trade right into one of these levels. However, you can also do it like over here. You can say, I'm going to take this if it gets through them. And this one pushed through, and you could say, okay, I'm going to jump on now, and now I can see it's going. The big players pushed it through, right? So that's how you use that information. Let me get you guys the link for those of you that don't have it downloaded. Like I said, you can get the replays of these trainings at TradeWestForex.com/blog, and you can also download that tool that I just showed you It's called Informer, tradewestforex.com/informer. I'm sure you guys have got some questions on this. We'll get into some more detail. And I just want to let you know that we usually put these recordings up on Monday, so look out for that. And I hope you use this in your trading.